What's going on, everybody? Stocks about the numbers. Welcome back. Wanted to do a quick update here as per request on one of the smaller cap stocks that we took a look at. I personally had some high conviction. I was highly anticipating these earnings coming out. And as we see down here, the company did beat earnings yesterday after market close. Name of the company is Ammo Incorporated, ticker symbol POWW, listed here on the NASDAQ. Stock right now hit a high, as you see here, of 255 today. Currently pulled back just a handful of cents at 246. It's up a quarter of a point, still up a little over 11% here on the day. And I drew out some of these trend lines here because it looked like, in my opinion, that it was almost trying to make this ascending triangle, which of course is bullish. And I was expecting that pop up into the 260s that we were talking about. But, it might just take a minute to cool off. But looking at these numbers here, we can see that the company comes in much more profitable on the EPS side than analysts expected. Analysts were expecting a loss of about 1.5 cents a share. The company ends up posting positive 4 cents a share. So very nice beat there on the profitability side, starting to narrow those losses, increase those margin percentages. And if we look at some of the numbers, we could say that technically some of the revenue is down year over year. So I can appreciate the fact that we do have that tiny red flag. However, again, in my opinion, we looked at a lot of the numbers and the company, again, over the years, the revenue, let's come down and look at it again. You can see, again, over the years, revenue kind of jumped up to that $240 million mark. And being that we had such a jump in revenue with the market cap still down here, $250 million, $300 million now, we can easily make the argument that over time we can continue to see more growth here from POW. But the big thing is, every time we looked at it, the company kind of ended up coming up a little shy, right? We had like a nice beat all the way back here, middle of 2023. And then we come over here, and again, I personally was expecting just another beat and continued growth. And as we see, the company came in about 4.5 million shy on the revenue side. So, they initially beat it up, and yes, we had that pop, but then it immediately gave it back and pulled back to sub $2. Then, of course, again, we had the news come out in the Middle East with the conflict, so the stock shot up, immediately gave it back, started dropping down into this wedge. These numbers came out, and again, we can see a miss on the top and bottom lines. Not a big miss on the revenue, but still, red is red, a miss is a miss technically, right? So the stock, that's what I mean. It's like they try to like gear it up and get it going into earnings, and then it's almost like it's always something, right? It's always something that just kind of hinders the stock and just prevents it from moving. So I think the reason why we're seeing 11, 12, 15%, I think at one point today at the highs, the reason why I think we're seeing this pop is because, of course, as it says here, ammo shares rise 13% after Q3 loss, narrows on improved margins. Yes, that's very good. But again, in my opinion, more importantly, just the fact that they finally came out with another earnings beat here on the revenue side, I think that's what's really pushing it up. And again, this was basically our long-term consolidated channel. Again, we had outside news internationally that popped us above that channel, and then we pulled back in. But if we extend this line here, you can see this was, we're looking at like 262, 264, maybe like around that line. So I was potentially expecting that today. Again, I pointed out the potential ascending triangle, but it didn't come to fruition. Ended up dropping down below this trend line. It's been ticking down just a couple of cents here. So, sometimes they do take a little bit of a breather, but overall, in my opinion, I do still believe that it will get up to this trend line here. And then in previous videos, we spoke about this key level here, this 286. I do think it's possible. And even though, again, we can say, wow, that's like another 15, 20% from this level. So it may seem drastic. But again, we're talking about what? That's, about 30 to 45 million more added to the market cap. So even if it jumps up another 45, 50 million in value, I mean, the market cap's only going to be like 340 million, 345 million, right? And the company's bringing in 200 million in change a year now. So that's why even with this slight percentage jump up here back to this 286 level, we could still say that it's undervalued. However, in the short term, again, we could have a little pop here to the 260s, 280s, and then it could kind of just drop down and start consolidating going into next quarter's earnings. And I think that 3 months from now, if they're able to do it again, what are we looking at here? Estimates about the middle of June. Okay, so obviously we have some time. I mean, they just reported earnings, but if the company is able, estimates 37.9 million, if the company is able to not report a loss, right? Because here you can see estimates right now of positive 1.5 cents. So if the company is able to not report negative EPS and come in or above this revenue number, I think that's what's going to help pump it up to 3. But I still say, again, on record, I said it multiple times, I think that this company is undervalued, and the only thing that it's really missing is that consistent earnings beat. That's really the only thing in my eyes that's slowing this one down. But let's come over here to stock charts very quickly. We can see on the daily, second resistance level 258, stock hit 255 today, right? So came very close and then had that slight pullback. But in my eyes, I'm very confident that we still have a little over an hour left, so anything can happen. But markets are climbing here to new highs. S&P well over 5,000 now at this point. Look at this, 5,028 currently. But in my opinion, as long as this closes at or above this 238 level, chances are it will probably hit 258, 260 in the near term. MACD, again, we spoke, was about to cross to the downside, but the company came out with the beat, so we popped up. RSI here on the daily still sitting at about 66, did go up and is approaching that 70 benchmark. But again, this was a company that was flying underneath the radar. A lot of people may have predicted that they were just going to miss again or just post some mixed report. And again, as we see that we have a lot of green here with POW, and up here, next resistance level on the weekly, 298. Obviously, we have to hit that 260 mark roughly, and then that 286 level, in my opinion, is going to be the key test. But if it does happen to get above that, then next stop is going to be 298. And again, we can see that on this pop now, the MACD has crossed to the upside on the weekly. RSI sitting here 58.6, so slightly higher than middle of the road, but still not at that 70 benchmark. And that's why when you look at it like this, we can say now daily RSI up at 66. The stock is up, what, 10, 11%. So, you know, like on Monday, if it stays flat or if it drops 1 or 2%, it's understandable because chances are the next 1 or 2 days after that, it will have the potential to take that next leg higher into the 260s and the 280s. But just wanted to do a quick update there on POW. And there were some other companies that we spoke of. I just want to do just quick updates here. I've been trying to do some earnings plays, some earnings calls here for you guys. Again, earnings, completely unpredictable, completely a gamble, especially if you're doing stock options. But something like Take-Two, I mentioned in my opinion that a lot of the numbers really didn't look too hot. And the stock was on a big run here throughout 2023, continuing into 2024, even though the numbers really weren't backing it up. And I said, in my opinion, I would probably, if I was going to play it personally, in my opinion, I would have bought puts going into earnings, not calls. As you see, this one happened to turn out right. You know, sometimes we get them right, sometimes we get them wrong. But long story short, we can see about a 2% miss here on the profitability side. And the company comes in just shy of about $1 million below analyst expectations on the revenue side. So not a massive miss, but again, a miss is a miss. And the fact that the stock, I think, was up like 80% in the last 12, 13 months, like we always say, what goes up must come down. And for them to continuously keep going up, they need to continuously and consistently post nothing but positives. And again, you have a situation like this where we had a high-flying stock in Take-Two, and then the company comes out with a slight miss here with earnings. Boom, you have a 7-8% drop sell-off. And everyone's asking me now in the comments, oh, is it a buy now on this dip? Is it a buy? Honestly, I really don't know. In my opinion, I do think they're going to continue to beat it up. I said initially that it would probably drop down to the low 150s if the company misses earnings, and that's basically where it went, as you see down here to about 152.25. But you know, we have to see over the next couple of days. I would remain patient here, in my opinion. I would give it a couple of days here to see if it, you know, bounces and just starts to climb. And a lot of people say it's an overreaction and, you know, we still think it's a great stock, so we're buying in. or if Wall Street decides to break that 150 level and start to bring it down into the 140s and the 130s. The numbers do still, in my opinion, look a little high. That's why in my opinion, I think we actually do sell off down into the 140s. But of course, only time will tell. Let's see if it's showing us anything on stock charts here. We can see the stock pulled back on the weekly. We're looking here, RSI still up at 55, right? So that can chunk down into the 40s and the 30s as well. That's why I'm saying the added momentum of the sell-off now could just be potentially beginning. And even in the immediate short term, something like this 200-day moving average pullback of about 149.5, I think that's very realistic. And in my opinion, I think it's actually justified, especially, again, look at the massive run that the stock went on. So that's why to pull it back to sub 150 and potentially the low 140s, I actually think it is justified. And here with the 50-day moving average kind of diverging and meeting up here with this pivot point of around 142.44, I actually think that may be my personal short-term price target on Take-Two Interactive. I think we may get pulled down to about that 142 level, right? It could like slightly break that pivot point, but then it could bounce off the 50-day moving average and try to like start inching up back to that 200-day moving average to try to get back to the 150s. But again, this is why we try to look at all these levels and the Bollinger Bands and the moving averages, and I try to show you guys the pivot points, right? Just so that we can kind of have an idea, okay, if we continue to sell off and we hit this level, but we close below it, that will, you know, technically show us that we have more weakness, so then we'll have to probably pull back and sell off to the next level, right? So when you're looking at these stocks, you do have to keep these pivot points, these resistance, these support levels in mind, so at least you have an idea of where the stock could go, right? But looks like the MACD again now potentially crossing to the downside here on the weekly after this big drop. So that's why I'm saying we do have some technicals lining up that could potentially pull this down a handful more points. So I would personally remain patient. Here you can see, yeah, we dropped down. We didn't quite hit this 150.82 second level support. But you can see the stock hit 158.11 and then looks like it rejected off of that support level of 157.87. So in my eyes, if it closes below this support level, which it technically should, but we'll see. If it closes below the support level, then that's why I'm saying we may drop down further into this 150.80 level and potentially down into the mid to low 140s. And of course, the MACD was kind of flat and potentially crossing to the upside. And then with the big chunk down today, you can see it kind of drop straight down and it's starting to sell off and head downward. So RSI again still up here at about 38. So, you know, it definitely chunked down from this 70 mark that it was just about 3 weeks ago. But again, technically 30 is the benchmark that a lot of people look at. So that's why I'm saying you may have potentially another 1 or 2 down flat days, really bring that RSI down. Then people are going to say, oh, you know, this is a great company and, you know, they just got beaten up and the RSI is down here at, you know, 29, so it's oversold technically, so I'm going to step in and buy, right? So you may have new volume come in if we hit that RSI 30 benchmark level. So that's something to keep an eye on as well. What else did we look at here? We looked at Mattel. Mattel had a little bit of a spike up. See, that's what I'm saying. This is almost similar to almost like a POW, in my opinion, right? It's almost like everyone kind of knows that the stock could be trending much higher. The problem is the company it's just not backing it up. It's just not performing for us. I looked at Mattel, you know, a while ago, and since I looked at it again, even though I still stand by my analysis and say long term, it could potentially be viewed as undervalued still here in the numbers. The problem is when you, like I always said, if you give Wall Street a leg to stand on, if you give them a reason to keep the stock down or beat the stock up, they will take advantage. And with something like Mattel, again, basically what we're just seeing is inconsistent earnings coming out. And it's rough because I know they brought in a little over 1.9 billion the previous quarter, and I was under the assumption that it would just kind of continue. And unfortunately, as you see here, the stock came up just a little bit shy, missing on the EPS side by about 7.5%. That, I think, is the main red flag here that analysts are looking at. And revenue, slight miss there, about 1.6%, as you see, missing by about 27 million. So it's just the inconsistent numbers, the inconsistent growth. And what kind of sucks about these companies is even something like a Take-Two as well. I mean, you know, obviously these video game companies, you know, they have constant releases throughout the year. So, you know, there's not always necessarily a perfect time to buy them, right? Because they're seeing, usually for the most part, you know, consistent revenue coming in, consistent game sales and whatnot, microtransactions. But it seems like the problem here with something like Mattel is, you know, if you're going to tell me that it's only really a buy for the holiday season, you know, then that's kind of an issue, right? Then that's kind of an issue. Because if you're telling me we have the potential to miss on like 3 out of 4 of the quarters throughout the year, but, oh, you never know, we might have a big quarter, you know, Q3 and Q4. It's like, you know, now in my eyes, this is just a gamble for an earnings play, right? And it kind of loses its value when we're talking about long-term growth, long-term investment, right? So based on a lot of the numbers we're seeing from a lot of the other stocks we're looking at, you know, we may have better buys than Mattel. But I wanted to bring up PayPal as well. PayPal is one here. Look, you can see PayPal with an excellent rebound here of 5%. And, of course, the company comes out and beats again. And, of course, they beat the stock up again. I've never seen anything like it. Just a remember, point of reference. First of all, another stock that we looked at that had a ridiculously overvalued market cap when looking at revenue, of course, was one of the biggest winners on Wall Street, Nvidia. And if you recall, Nvidia was bringing in about $8.5 billion a quarter, and the company had a market cap of over $1 trillion, right? So now PayPal comes in, of course, again, above analyst expectations. On the profitability side, excellent beat there, 8.6% coming in above analyst expectations. And look at this surprise here on the revenue side as well, almost 2% here, coming in 146 million above analyst expectations, breaking that $8 billion mark. And what do? They kind of dismiss the immediate positivity, just like they did last time, and they're beating the stock up for basically any reason they can find in my eyes. Now, granted, I understand the company did come out and say, hey, listen, profitability moving forward for 2024, I think we might actually come in a little below expectations, right? But you know, at the same time, it's like Wall Street, I feel, made that prediction for themselves to kind of beat the stock up like several quarters ago, if you remember. And now we're seeing quarter over quarter going into this supposed quote-unquote rough times ahead for PayPal. The company is still coming in above analyst expectations. They're doing their job. That's the way I'm looking at it. They're doing their job. The company is growing. And they're doing it phenomenally, in my opinion. So that's why, again, you know, depending on what information comes out, and again, I can appreciate the fact that they have the potential to come in a little bit lighter on profitability for 2024, but the company is still really kicking ass and taking names. And that's why you had this dip down. It was down huge, as you see down here to 55. And then what happens today? It just immediately bounces. Now we're immediately up. We're having a 5% rebound here. We broke above 59 for a little bit, probably on our way back to 60, and it's probably going to retrace back up to these trend lines here, 61.5 roughly, 63.25, and it's going to refill that gap that it just chunked down for, in my opinion, really for I don't want to say not a real reason, but not a very impactful reason on future value of PayPal as a company. If that made any sense, right? Because we looked at the numbers last time. Again, now we have a market cap, even after this little bump here, we have a market cap 63.5 billion. Company's trading 14 times earnings. And they're over here just consistently beating earnings. We have a PE of less than 15. And again, we can see, look, 3 out of 4 beats on the EPS. Look at this, actually quarter over quarter for the last 2 quarters. 6% beat here, and then a slight miss on EPS, and then 6% beat, and then 8.6% beat, right? So this is what bothers me about these situations, because again, I understand the forecast may come in a little bit light, so they want to immediately beat the stock up. But we've seen situations where going into a new year, after a company says that, they may have a phenomenal Q1 or Q2 earnings, right? And then they come out and say, oh, hey, listen, we got it wrong. We actually started off this year doing great, and now, we're actually going to meet those expectations or potentially surpass them. And I think, again, it's much easier to react and predict. I know we shouldn't make assumptions, but in my opinion, I don't know why, but I have a sneaking suspicion that something like that is going to happen. And again, just look at this revenue growth here, 17.5, 21.5, 25.5, 27, almost 30 billion. And we looked at forecasts moving forward, right? The company's expecting north of 30, 31, 33 billion over the next 1, 2, 3 years. So they're still expecting stable growth. And even for 23, as you see, we can make the argument, oh, look at profit margins, they still pull back. The company still had a net margin percentage of around 9%. And then we roll year over year and it jumps back up to, the mid-teens, up here at 14.25%. So that's what I'm saying. I feel like they're really just beating this company up. And usually a situation like this, when the numbers are strong and a company is consistently beating earnings and seeing this type of growth year over year, I do not care what any analyst tells me, because I can bet my bottom dollar that they are advising their clients and their institutions, their own companies, to further build positions in something like PayPal. Because I'm telling you, yes, it's going to take a while. Yes, you're not going to see it immediately within a week pop back up to $100 a share so you can immediately double and triple up your money. No, that's probably not going to happen. But the one thing I will say is they're probably going to continue to beat it up. They're going to continue to keep it underneath the radar. They want everyone to forget about it. They don't want you to pay attention to the numbers. And then before you know it, the stock's going to be back up at $70, $80, $100 a share. And then they're going to put the spotlight and the limelight on it, talking about how stable it is. Oh, look at this. We've had some mixed guidance from the company, but they've been consistently beating earnings for how many years, how many quarters in a row. All of a sudden, they're going to start touting all the positive catalysts about something like PayPal. Which is why I always say, in my opinion, it is much, much easier to simply follow the money and follow the revenue. Will we potentially miss on some EPS quarters? Guess what? In my eyes, we'll cross that bridge when we get to it. Because right now, the growth of the business overall and the consistent beats on the revenue side cannot be denied. And that's why I think something like PayPal had a phenomenal rebound today here, up a little over 5%. Let's see, what else have we looked at recently? Talking about earnings here. Also, we looked at Snap. Again, we get some right, we get some wrong. Snap was a phenomenal call by yours truly. And as we see here, a nice beat on the EPS side by about 12 2/3%, and we can see that the company missed by about 19.5 million on the revenue side. And again, I said in my opinion, the key for a lot of these stocks, well, it should be anyway, is revenue growth and coming in above expectations on the revenue side. And as we see, the company came in light on the revenue side and also warned about any future obstacles they may run into. Boom, the stock took like a 30+% hit, going from closing north of 17 and then immediately dropping down to actually sub $11 here over the last couple of days. And in my opinion, where'd this hit? What was this low? 1082. So yeah, I think we were looking at like 1160 or something here. Let's switch over here to stock charts. Yeah, see the 200-day moving average on the daily, 1165, and we can see it immediately chunked down below that and then closed below it. So that's why, in my opinion, the added selling pressure is coming in, and we could potentially see back to this key level of around $10, in my opinion. But chances are, again, over time, the company definitely could rebound. But yeah, sometimes we just have to trust our gut. And in my opinion, I just felt that they were going to disappoint in some way, shape, or form. And we know a stock like Snap really pops or really drops after earnings, right? So, of course, earnings, we have a 50-50 shot to be right or to be wrong. I happen to be right on this one, but again, I'm not just showing, nothing but winners here. Again, I said I like PayPal. I said chances are they're probably going to beat, and they did, and they happened to bring the stock down, right? So, I probably would have said, oh, PayPal calls, and I was wrong. Again, I was kind of expecting a nice beat on Mattel, and it turned out incorrect. The stock essentially basically flat, so you're probably not taking too much of a hit, but it's not the result we wanted, right? So this is why I just want you guys to understand the risks involved with earnings. Just because you're buying calls on Walmart, hypothetically, because they're posting earnings, they're not going to beat and just go up just because it's Walmart, right? It's unpredictable. We don't really know. But here with something like Snap, again, closing below this 200-day moving average, that's adding to the selling pressure. So that's why I think we could potentially see that $10 level here. Let's switch over to the weekly, see if we see anything. Yeah, we can see it's, see now on the weekly, we can see that the stock currently is below the 50-day moving average, which is all the way back up about half a point higher than where the stock's currently trading, while markets are raging. Snap, as you see, still remaining down, currently about 1/3% here on the day. So it may be helping them to not completely tank down into the tens. However, it just doesn't seem like enough momentum, in my eyes, to bring them above this 1151 here inside of the next 45-50 minutes going into the close. So that means technically, in my opinion, it will probably drop down to about that 10.5 level. You can see next support level 1056. So that's why I think, in my opinion, it drops down into the tens. RSI here on the weekly, sub 41, still has more room to drop. And of course, you can see that the MACD has recently crossed to the downside as well. So that's why it's going to go down probably, in my opinion, before it goes back up. But here we could make the argument, the RSI on the daily, down here sub 30 in the 27s. However, as you see, it kind of got there a day or two ago as well. So currently in this situation, I just think a lot of traders and a lot of investors alike are just very upset, with what Snap reported. They were expecting bigger and better things. So now the stock has to take a massive cool off and a massive break here before probably, finding its footing and climbing back up to the 12s and the 13s going into next quarter. And chances are, if the company happens to come out with a beat on the top and bottom line 3 months from now, next earnings report, it'll probably pop back up to the 16, 17 level where it was before, right? But, of course, we'll cross that bridge when we get to it. And there was one more. Oh, actually, I'm sorry. There were two more. So, Palantir, of course, we saw what this company posted again, as we see. Beat on the top and bottom line here, beat on the EPS side by a little over 5.75%, and we can see beating on the revenue side just shy of about 5.5 million, just a touch below 1% beat there on the revenue side, breaking into the 600 million mark. And you can see that even today, the stock continued higher, going a little over 25 here, 25.11. I did say that depending on what can happen, we can probably immediately see 21, 22, which we did. And then we do have the potential to get up into the 23s and the 24s. I personally thought it might take like a couple of days, but again, we know the kids, the traders, they love Palantir. This was a big winner for them, so I can appreciate the fact that they're still pumping it. They're still touting their win, and they're still piling in shares and calls alike, probably. So, something like Palantir might actually have the potential to keep going up here at 25.5 to the next fib here at 26 and change. But we'll see what happens. In my opinion, again, I do still say that Palantir is overvalued in the numbers. But, sometimes you just have to ride the wave, and sometimes you just have to take what the market gives you and just ride that momentum. And we can see also, though, that the RSI is pretty high here. We can see we're up here at 79.80, right? We've been there basically since the company reported earnings and had that pop, Excuse me. So we could potentially start cooling here, have everything readjust, and we could pull back down into the low 20s maybe for a couple of days before potentially taking that next leg higher and just slightly making those higher highs moving forward, right? You know what I mean? But yeah, overall looks pretty good here. Aside from the RSI, I don't see any resistance here. And switching over here to the weekly, random ad, my apologies, and we can see that this resistance level here, 2407, has currently been broken above, and the stock's here at 2436. So what you need, in my opinion, is a close above that level to remain bullish. But again, it could potentially just go flat and just kind of trade sideways for a couple of days. Catch its bearings, catch its breath before taking that next leg higher. 3096 might be a little extreme, but I mean, you never know what can happen. RSI also above 70 here on the weekly. So that's what I'm saying. You know, after this big run, essentially almost every day this week, we could just potentially pause for a little bit. But I will say the MACD has also now looks like it crossed to the upside there on the weekly as well. So I actually do say, in my opinion, that Palantir may want more. I'm just not exactly sure how quickly it can happen for you. And the last one I want to look at here is ELF. ELF, we can see immediately drop down here out of this rising wedge channel that we were pointing to, but then of course immediately regained and popped back up. A lot of people were kind of mixed, right? They didn't really know how to react here, but in my opinion, on my channel here, we all know how to react, because what we do is we follow the numbers, we follow the money. And basically, the prediction that was made that we're probably going to see another earnings beat and more consistent growth, not only on the profitability side, but on the revenue side as well. The company's been doing phenomenally well. And we can see here that on the EPS side, almost 30% above analyst expectations on the EPS side. That's not anything to sneeze at. But more importantly, on the revenue side, posting almost 271 million off estimates of only about 239 million. Phenomenal beat for Elf Beauty here, ticker symbol ELF. We looked at a couple of days ago, and we can see here north of 32 million coming in above analyst expectations, almost 13.5% above what they were expecting. So this company is doing what it has to do. And you know, the growth cannot be denied, and that's why I simply say sometimes just follow the numbers. And again, you know, it could pause, it could immediately drop down and try to scare some shareholders out of it. But overall, if you are invested into a stock that is consistently beating on the EPS side, consistently beating on the revenue side, coming in at or above analyst expectations for fiscal year revenue, or just total profitability for the full year, these are consistent positive catalysts. And I'm sure if we look here, you know, just even something as simple as this, you know, Elf Beauty is maintained at hold by Stifle. You know, that's what I mean. You are constantly having analysts come out saying, hey, listen, we think it's worth more. We think it's a buy. We think it's a hold. Those are all positives. Elf Beauty maintained at buy, D.A. Davidson. Elf Beauty maintained at buy by Truist. Elf Beauty too expensive to become real acquisition candidate. Fair enough statement. That is a fair enough statement. Because the company, again, has been rolling on all cylinders. And this is what I mean when I talk about a lot of these smaller cap, up and coming, growing stocks that we've been looking at on the channel. Stocks like Fubo, stocks like STEM. Again, STEM, over $1 billion backlog they have. So the revenue more than likely is going to start coming in over the next couple of quarters, and they're really going to start chunking up to those next milestones, in my opinion. But of course, we'll cross that bridge when we get to it. We have to see the numbers first. But something like that situation, SoundHound, perfect example, right? In my opinion, they continue to grow. They continue to sign new clients. I feel that the stock is undervalued overall. But more importantly, we also saw that article that we looked at together where the CEO mentioned that he was approached multiple times to get bought out. And this is what I always say when it comes to these stocks. When you're looking at something like an Elf Beauty a year, 2 years ago, right? Wait, hold on. Let me back this up. Look at this, right? Look at this. So that's what I mean. Like, coming out of like this 2020 dip when everything dropped down, and the massive run that something like Elf went on as they were consistently beating earnings, like here during times of turmoil where you have a winning company that is growing when everyone else is struggling and shrinking, in my opinion, if you were a much larger corporation, now, right there, is the time to make your acquisition for this company and now get this newly added business onto your balance sheet. But of course, as we see, they missed the boat. They let it fly. They felt it wasn't a priority. And then what happens? The stock explodes from the 20 to 30 point level. And now it's up here at $175, right? So the stock is up 400, 500, 600% from some points here. Just within the last 2 to 3 years, when you could have easily scooped in and grabbed the company up for 1/5, 1/6 the value, right? Someone probably could have bought them a couple of years ago for about $2 billion and change. Now the current market cap is $9.7 billion, with probably consistent increases of revenue and profitability moving forward. So you're going to have to give them at least a 20 to 30% sweetener from this point. Now we're talking about a $12 billion stock. When 2 to 3 years ago, it could have been all yours on your balance sheet for probably about $2.5 billion and change, right? That's why I consistently look and give you guys updates, again, on stocks like Fubo, SoundHound AI, STEM Inc. There's a reason for this. There's a method to my madness. But overall, Elf, again, back inside this nice upward rising channel, and I'm sure, eventually it could potentially break, pull back, dip. Well, at that point it'll be up to the 180s potentially, but could pull back into the 160s and potentially 150s. But again, if we have a nice grower and we're consistently beating analyst expectations, what do? We buy the dips, in my opinion. But I think that was it. So yeah, those were a bunch of stocks that I tried to put out just my opinions on, kind of going into and after earnings. We looked at Palantir, right? I tried to do a couple of earnings plays for you guys this week. And again, we got a couple wrong, Mattel, PayPal. But overall, we were right more than we were wrong. And that's what I always say, right? That's one of the recipes for success here in the stock market. You have to be right more than you're wrong. Don't overextend yourself. Don't pile in your entire portfolio into one position. And, of course, something like a Fubo, and believe me, I know it's easier said than done, but something like a Fubo, again, the news came out with Disney starting their streaming service. Fubo takes a 30% hit. Everyone wants an update. Everyone's scared. Should we get out? Are they going to continue to beat Fubo up? No. Fubo has not changed at all. It is the good management, the good business, the good revenue growth at Fubo that is forcing someone like Disney to make those necessary changes to combat and compete with Fubo. So when I see something like Fubo at 2.5, which in my opinion it's worth $4 or more, and you're keeping it down at, $2.50, $2.20, no problem. In my eyes, that's when I build my position and consistently piece my way in. Now some random announcement from one of their quote-unquote competitors comes out, and you chunk my stock down 30% just because they made an announcement, but meanwhile the whole time my stock has been doing well and has been consistently beating earnings for the last 2, 3, 4 quarters in a row. Yeah, listen, thank you so much. And instead of now adding to my position here at 2.5, 230, 210, I'm now able to buy shares at 175, 180, 190. So thank you so much for that. And again, we can see just a quick update. They chunked it down to 175, and within 2 days, we're back up above $2 already. So if you just bought that dip, you are up roughly, what is that? 1/7. So we're talking, what's that, 14.7%, I believe. So there you go. As it chunked down 30%, and a lot of people were scared out and possibly considered cutting their position because of potential future roadblocks that Fubo might run into, You potentially scooped up shares at 175, 180 and change, and you're already up 13, 14, 15% just within a couple of days. We know what we know, right? And it goes across the board, whether we're talking about a brand name larger cap company like Hershey, or we're talking about a smaller grower that found its footing and is now making the U-turn like a fubo. Rules are rules. That's why I always say stay sharp, stay disciplined. But I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. You guys have a great weekend.